Hi, I'm Judy Shaw on the floor of the New York Stock Exchange. Joining me today is Michael Venuto. Michael is the Chief Investment Officer at Toroso Investments, and Douglas Jonas, who is Head of Exchange Traded Products at the New York Stock Exchange. Gentlemen, thanks for joining me.
Thank you, Judy.
Thanks for having us.
So let's start. Both of you. Tell me, what are the main indicators of the growth of the ETF industry?
Maybe I'll kick off. So one of the main indicators is just how successful assets under management have grown, not just this year, but really for the past 5 years. We're coming up almost $4 trillion globally invested in the asset management business of ETFs alone. So we think about some of the more traditional classes like mutual funds. We're seeing those shed assets. We're seeing people sell mutual funds, and we're seeing them instead buy exchange-traded funds.
Yeah, and I would say it's also been a rising tide that floats all boats, right? The ETF industry and the whole ecosystem is really growing leaps and bounds across all spectrums. The AUM growth is one thing, but and that AUM growth over the last 5 years is about 20% a year. But we're also seeing many other companies get involved and new issuers coming. There's almost 80 issuers in the US today.
Why do you think we've had such growth in the ETF industry?
I think it's because the clients want it, right? The ETF is just a more efficient vehicle than, I guess we'll call it the mutual fund industry, right? It's low cost, it's transparent, it's tax efficient, and if that's what investors want, it's great to have the financial services firms move towards the client.
Yeah, I love that we're using emojis again, by the way. Look, the markets go up, markets go down, we hit bull markets, we hit bear markets, but the reality is investors are adopting ETFs for every situation, and issuers are coming up with ETFs for every situation, right? Whether the markets are sunny or not, there's an ETF to really invest in to help you in your portfolio invest exactly the way you want to. So while we're talking about ETF growth in both their assets and trading, what we're talking about today is also a product that captures the whole ecosystem. So if an ETF is growing, it also means the custody bank behind it is growing. It means the exchanges are trading more shares. So there are many different components of that full ecosystem, and it's exciting to be able to take part of that every day.
Who are the industry's main players?
So we broke the industry into kind of 5 categories. The bulk of our index, about 50%, is the sponsors. It's companies like BlackRock and WisdomTree and Invesco. And then we move into the other players that are actually very much involved. The exchanges, the New York Stock Exchange, the CBOE, things like that. They're involved from data, they're involved from listing. Then we move into the index and data services. So FactSet, Morningstar, they're helping everybody research these things. But we also have MSCI and S&P with the highest margins of any companies in our index. Then we move into the liquidity providers, people like KCG and some of the trading companies that are down here that are helping facilitate the access to all of these ETFs. And then finally, it's the back offices, it's the service providers. SEI is a great example. They reinvented their business, becoming the distributor behind BlackRock. So I often say you can't capture your alma mater, I guess we call Vanguard's expense ratio, but I'm not sure you would want to. If you look through the prospectuses, you'll see that Vanguard's working with and paying revenue to 11 other companies in our index. And that's how we capture that ecosystem. I guess we'll use an emoji here to show it's a targeted exposure.
Yeah. And you know, the point being, a lot of times in this segment we'll talk about the growth of ETFs and the growth of the marketplace. And this is the first time that someone and a group of people have come together and said, well, why not offer investors at home the ability to invest in the industry at whole, right? How do we take advantage, how do we as individual investors make money on the entire ETF ecosystem? So finally, we have an ETF of ETF.
So tell me, what's in the index?
So the index right now has a tiered system. So our goal was to have the companies with the purest exposure to ETF growth be the largest components, and then tier it down from there. And we do it very much in an active research process that gets delivered in a passive index. So at the top of the index are the pure plays. It's the WisdomTrees, it's the BlackRocks, it's the Invescos, it's some of the exchanges. And then as we go down, you'll start to see companies like SEI and things like that. One of the companies that I love to use as a great example as to why we do the tiers is at that bottom tier, it only represents very small positions, like 0.6% positions. a company like Charles Schwab would have been in that tier 5 years ago. Today, Charles Schwab is the 5th largest issuer, and they've done it in an amazing way. They've approached it not by just being the low-cost provider, but by having all kinds of robo-solutions and one-source solutions and involvement with Windhaven to put themselves in a different place and innovate into the ETF industry.
That's great.
And
well,
as you can see in his I love ETFs
Yes.
button, and somewhere we probably have an emoji. Here we are. With the, you know, this is exactly why we love ETFs. The ETFs level the playing field. They level the playing field for issuers like a Charles Schwab that wants to come into the market and issue new products and be a central part of the ecosystem. It's also leveling the playing field for us, for investors. You have the ability with one trade to now have access and diversification across a whole slew of other securities instead of having to buy singular commission-based driven markets, right? So as an investor, you know, we love the way in which they can lower our cost of investing, give us transparent, very straightforward products that also have great tax advantages as well. So it's why we love the ETFs and ETFs of industry.
well, I want to thank you both for joining me. This has been very insightful. And thank you, everyone, for tuning in to another segment of Exchange Traded Fun.